Wednesday, the 28th of January. My name is Jessica Amir, a market strategist here with Moomoo. Thanks for your company as always. Well, we are so back. The US stock market is back at a brand new historical closing high. The Aussie share market a 1.9% puff away from its record high. And we're right in the thick of the busiest week of 2026 so far. So what's going on? Well, in the US this week, half of the companies in the Dow Jones report results, a fifth of the companies that make up the S&P 500, they report results. In tech, of course, we're awaiting earnings results from Tesla, Microsoft, and Meta. They report earnings tomorrow. And then we've got Apple reporting results on Thursday in the US. What is the market expecting? Well, we're expecting NASDAQ 100 companies to report 20.5% year-on-year earnings growth. So that's why investors are buying right back in, trying to get ahead of the curve. Now, this doesn't mean that there are not going to be bumps. 2026 outlooks will be under scrutiny. Of course, large investors will be questioning how on earth AI record spending is going to translate into profits. That's what's going to be questioned. So it could be a very bumpy ride this week. What else to watch? Well, all eyes, of course, on the Federal Reserve. Their first meeting of 2026. Largely no interest rate cuts are expected. That's obvious. But at 7 a.m. tomorrow, we will know either way what is going to happen. But there is, of course, rising speculation that Donald Trump could maybe, just maybe, name who is the new incoming Federal Reserve Chair. We'll bring you everything you need to know tomorrow. Also, what is at center stage? There are a couple of major macro developments that investors need to be aware of and that they can get ahead of. We're going to cover this right now. So what is taking shape? Well, the US dollar has continued to hit new lows. We track that via the DXY, which tracks the US dollar against a basket of currencies. And ladies and gents, overnight, the DXY hit its lowest level since 2022. This is great for Aussies when traveling. I mean, it's also great for US tech companies. Of course, some of the biggest tech companies, let's call it about 50% on average, have got revenue from overseas. So think Microsoft, Apple, Google, Nvidia, Meta. They get global pricing power when the US dollar falls, of course, because their goods are priced in US dollars. No surprises there. Some of you might remember a couple of years ago, we spoke about Microsoft in 2022 flagging that they were getting hurt by a higher US dollar. Of course, the US dollar was at highs in 2022. And back then, Microsoft actually flagged that they were expecting earnings and revenue to perhaps be a little bit more depressed. And that's why they actually wrote down $460 million because of weakness in their sales and revenue. They copped it on the chin because of a higher US dollar. So now companies like Microsoft and other tech giants are probably going to have the opposite effect. This is the argument that I want you to think about. Could their earnings and revenue rise faster now with the US dollar continuing to fall? It's falling like a stone. So if you've not invested into the S&P 500 or the NASDAQ 100 before, then you might want to consider perhaps investing for the long term, given the dynamics that we've got at play. Big tech companies are expected to, of course, benefit from the lower US dollar and, of course, rising earnings this year. So what are the rising earnings expectations? So just to reiterate, the NASDAQ 100 companies are expected to report a 21% year-on-year earnings growth. I'm rounding. And if you think about the S&P 500, we are expecting, or the market is expecting, 11% earnings growth year on year. So how do you get ahead of this potential scenario, thinking with the long term in mind? Well, you can look at ETFs that track the S&P 500 and the NASDAQ 100. The second major macro development is what's happening down under here. So today, Aussie inflation is expected to rise more than the RBA wants. So this basically means Australian interest rates will probably rise a lot sooner than you think. Now, we really need to pay attention to what the market is actually telling us. Markets actually see a 62% chance the Reserve Bank of Australia will rise interest rates in Feb. And there's a 67% chance the RBA could hike interest rates in May. So maybe 2 rate hikes before June, right? This means a couple things. So the Aussie dollar can continue to rise, which is great for all of us when we're traveling. While the US dollar this morning, before recording this, it rose to 70 cents, that's US, for the first time in about 3 years. So the Aussie dollar has never been this high since February 2023. The other thing that you should also consider while I'm speaking about the Aussie dollar is because the US dollar is being pressured as that continues to fall, and as we've got commodity demand rising, the Aussie dollar can keep strengthening. So, this is the narrative for the rise of the Aussie. We also know Australian commodity companies producing and exporting silver, gold, copper, platinum, palladium, uranium, and iron ore. They're actually seeing red hot demand. So, what you could consider with these scenarios is maybe being invested in Australian commodity companies, particularly given the materials sector this year down under is expected to see some of the strongest earnings growth that's far above big tech earnings. So I spoke about this before we went on Christmas holidays, just reiterating the point right now for you in case you missed that. So earnings growth for the Aussie material sector is expected to be 32% year on year. So if you are looking for investing inspiration, how do you invest in commodities? We can put a link to that prior recording and other prior recordings in the description below to where you found this video or podcast. Now let's move to investments to add to your watch list. So with the fall of the US dollar, semiconductors are back in vogue, and big tech companies are expected to announce that they could spend well over 500 billion US dollars on AI infrastructure this year alone. So think about Microsoft, Alphabet, which is the owner and the company behind Google, Amazon, Meta. All of these heavyweights are ramping up AI related capital spending and haven't even mentioned Tesla. So they're all trying to ramp up AI related spending aggressively to get ahead of one another, but to also stay competitive. Now, this basically points to more demand and higher demand this year and years to come for, of course, what they need, and that's chips. And that's why I wanted to bring Micron into the fold now. Micron shares hit a brand new record all-time high overnight, and that's thanks to their shares gaining 5.4% in the overnight session. So what took place overnight? It's not just about investors trying to get ahead of the curve before big tech earnings are released, but Micron also announced that they are investing $24 billion into a Singapore plant to boost NAND supply. Just as AI demand strains global memory supply, they're really hunkering down into NAND. And for those of you, just as a quick reminder, NAND is basically long-term storage memory. So it's basically where companies use, well, NAND, the acronym is basically where you store data when power's off. So NAND is really heavily relied upon in things like smartphones, data centers, USBs, and increasingly AI servers. The other thing to consider to the betterment and benefit of Micron is memory was one of the fastest growing US sectors last year. And the thinking is that this could potentially continue this year. If you have a look at what the average investment bank or analyst is saying about Micron, it's overwhelmingly pretty bullish. And you can see this on Moomoo's platform. This basically reflects that earnings growth is expected to continue this year and perhaps the year after. Morgan Stanley actually has Micron as their top AI pick for the year. So if you think you missed out on maybe that crazy 343% share price growth that we've seen over the past 12 months, look ahead, more blue sky could be ahead for Micron perhaps over the next 12 to 18 months. Let's change pace to BHP. BHP once again overtook CBA as the biggest company down under here on the ASX. It's now got a market cap or size of $252 billion. That's, of course, amid strong commodity demand. Now, BHP is trading kind of around the vicinity of record all-time high territory. And for those that aren't tracking BHP, it's gained a whopping 49% from the lows that we saw last year. Year to date, it's doing pretty good things as well. It's up 9.3% so far, 28 days into the new year, and it's also up about 27% over the past 12 months. And about 3% of that gain came from yesterday's gains on the ASX. So again, why the rush into BHP? Well, it reflects what we're seeing globally, and indeed for the Aussie resources sector, particularly copper. And just to bang on the table, I do believe that the Aussie commodity sector will have bigger gains this year than US tech stocks, and the market is telling that as well. The commodity sector earnings growth will likely dwarf tech earnings growth. So if you aren't invested in commodities, you probably might need to ask yourself, why not? But do consider, if you were to look at BHP's ratings today, it might not be screaming out to you as a buy. That goes without saying, because the average analyst has got BHP as a hold. But climates can change pretty quick. BHP releases their earnings results on Feb 14, or rather Feb 17. So maybe we see some revisions, some earnings be upgraded, or maybe BHP makes some announcements ahead of them reporting results. Either way, do keep your eye on BHP. Morgan Stanley does have BHP, though, as a buy, so they're kind of going against the average grain. Morgan Stanley sees 10% share price growth, up from yesterday's close of $49.75. Last but definitely not least, let's change to RTX. RTX, they reported results overnight in the US, and for those that aren't tracking this company, this is a defense giant. So one of the biggest in the world. They actually build jet engines, aircraft, space systems, and they actually build radars and missiles. And they took over a company called Raytheon several years ago. Now, of interest, why this company just keeps on hitting record all-time high after record all-time high is because the makeup of their client mix, and they're increasingly seeing orders from their biggest clients. Who are they? Well, the US government. So it's kind of almost, if you think about this company, I don't know if you want to think about this, it's got almost like a subscription model. So about half of its revenue comes from US government contracts. That includes the Pentagon and other US government agencies. Investors, they're definitely piling into RTX, and that's why its shares overnight closed at their second highest level in history. Overnight, it punched up 3.7% higher. This year, it's up almost 10%. And phenomenally, it's also sent a cracking gain of 67% over the past year. And I guess you could say, yes, it's probably going to keep on climbing if you believe its outlook, and if you believe US government contractors will continue to buy more of RTX goods. And it goes without saying what we are seeing from Trump and about the defense push. You might be expecting this company to benefit a lot more in the future. Also, if you believe their outlook, so last night RTX announced that they've got a record backlog of $260 billion of orders. So it's just outstanding. That's 260 bill US, by the way. And 92 to $93 billion in sales is expected to hit their books this year. So for context, that seems like a lot of money, but they just reported quarterly revenue growth of 12% year on year, and their quarterly revenue hit $24.2 billion US dollars. And again, just to bang on, they're saying that their yearly revenue is expected to hit 92 to 93 with a backlog of 260 billion in orders. Just outstanding stuff, and no surprises. On Moomoo's platform, you'll see that RTX has got a buy rating among analysts who cover the stock. Deutsche Bank, JP Morgan recently reiterated buy ratings for RTX. $216 is a price target by Deutsche, and overnight it closed at $201. Thanks for your company. Stay safe. Happy trading.